Okay, let us start with our practice session on capital gain. Okay, my screen is visible to everyone.
Yes, sir.
Yes, sir.
Hi, Siddharth.
Yes, sir.
Okay, now, okay, let us start with our practice session on capital gain. Okay, so it says Mr. Raj is a resident individual, age 69 years, sold an urban agricultural land for 75 lakh to Whipple on 15 December 2024. So he has sold an urban agricultural land. We understand this is an capital asset. If this would have been a rural agricultural land, it was not a capital asset. And he sold on 15th of December 2024. That is after the budget date. So there would be no indexation while computing it. But yes, if they actually will be asking the tax liability, then we understand. Then how do we compute the tax liability? We have options available. Option one with indexation, 20%, or without indexation 12.5%. Let us see what they are asking from us. Are they asking about the taxes or they are just asking about the capital gain? So they are asking compute the capital gain for the assessment year 25-26. So they are just asking about the capital gain. If Raj exercises the option of shifting out of the default tax regime under 115 BAC and he is following optional regime, and we just need to compute the capital gain. CII is given to us, but I don't think that the CII would be of much use because this asset is getting transferred after the date of budget. So it is after 23rd of July 2024 or thereafter. So no indexation would be there. Okay. So he sold it for 75 lakh when the stamp duty value of the agricultural land was 95 lakh. So we understand that 95 lakh is the stamp duty value, and for real estate transaction, 95 lakh is more than 110% of the selling price 75 lakh. I believe yes. So 95 lakh would be the full value of consideration. However, the agreement to sell, again, there is an agreement to sell. So we understand, we know it, that if there is an agreement to sell and he has received something earlier to that in the banking mode, then we will take the stamp duty value of the agreement date, not of the registration date. So, however, the agreement to sell the agricultural land was entered on July 15, 2024. See, agreement was just entered on July 15, 2024. So it is pre-budget. So for agreement, we don't see pre-budget, post-budget, because pre-budget and post-budget is actually the thing which we should see for the date of transfer. He sold this land on 15 December 2024. So this is the date of transfer. But agreement date or agreement stamp duty value is only relevant if we have received something in banking mode, at least some consideration. Now, however, the agreement to sell the agricultural land was entered on July 15, 2024, and Whipple gave 4 lakh rupees. He gave 4 lakh as advance through IMPS. So 4 lakh rupees he has received through IMPS, that is through banking mode. The stamp duty value at the time of agreement was 85 lakh. So 85 lakh is relevant for us. Now 95 lakh is not relevant for us. So just see that whether 85 lakh is greater than 110% of the selling price 75 lakh, yes or no? The answer is yes. It is more than 110%. So 85 lakh would be the full value of consideration. Raj paid 1% of the sale consideration as commission to the broker. Expenses on transfer is also there. The land was purchased by him on 15th May 2002 for 10.8 lakh. Okay. And it was being used for agriculture purpose since then. Okay. So he's using it for more than 2 years. He's using it for the agriculture purpose. It's been many years now. He purchased another agriculture land in rural area on January 1, 2025 for 40 lakh. So he has sold an urban agriculture land. And if he will be purchasing another agricultural land can be urban or rural. So it doesn't matter. So he is purchasing the rural agricultural land. So we understand what is the exemption, guys. Which exemption do you think that which should be available to him? Everybody tell me which exemption would be available to him. Selling an agricultural land, purchasing an agricultural land. Is it 54, 54B, 54 EC, which exemption would be available?
So B.
It is 54B. 54B would be available to him. And he has purchased this agricultural land on this date. And this land was also sold by him on March 12, 2025 for 45 lakh. So he has purchased the agricultural land. And in the same year, he sold it also. And he invested the entire proceeds in the FD in a nationalized bank on the same day. And we need to compute the capital gain. Okay. So let us start with the first calculation of capital gain on this urban agricultural land. Then we will be giving the exemption. So it's not that difficult question. I believe we have already practiced so much. So it is a 4-mark question of September 24. Everybody with me. Solution 1. So this would be computation of capital gain This is assessment year 25-26. The assessee name is Raj. And he is following optional regime. And you understand in capital gain, there is no difference in optional regime and default regime. They both are same. So full value of consideration since stamp duty value is more than 110% of the selling price and stamp duty value 85 lakh is more than 110% of 75 lakh is the actual selling price. So we will take the full value of consideration as 85 lakh. And we will give a note, a short note over here. We will say that stamp duty value of agreement date is relevant as some consideration is received in banking mode. Okay. Correct, Sugandha, 54B. Now, less index cost of acquisition or cost of acquisition? Cost of acquisition since transferred on or after 23rd of July 24. So we will not be indexing it. It would be just the cost of acquisition. And the cost of acquisition of this land was 10.85 lakh. There is no improvement, but there were expenses on transfer. Can you tell me 1% of what? Expenses of transfer, they were saying 1% of sale consideration. 1% of what? 1% of 85 or the actual sale consideration? Actual sales, right? So it would be 1% of 75 lakh. So this is 75,000. So 85 minus 10.5 minus 75.
$73,40,000.
Correct. 73,40,000 is the gross capital gain, gross long-term capital gain. And since he is purchasing a rural agricultural land, less exemption. Guys, if you don't remember the section number, please don't write it. You should not write just 54 over here, because 54 is altogether a different section. So if you don't remember the section number, then skip that writing the section number. But in case you remember, then you should write it. And generally, I was telling you in the last class also that for capital gain exemption, you should remember these sections. It is just 4 or 5 sections under section 54B. How much is the exemption under section 54B? Simple, the gross capital gain or the amount invested in the agricultural land. And the amount invested in the agricultural land, that agricultural land can be urban or rural. A, gross long-term capital gain. So this is 70,40,000. B, amount invested. The amount he has invested, how much he has invested? He has invested for 40 lakh rupees. Whichever is lower. So 40 lakh rupees would be the exemption which is available to him. So his long-term capital gain is coming as 3340. This is his long-term capital gain. Now, we know that whenever you invest in 54 also residential property, in 54B also agricultural land, you should hold this agricultural land or you should hold this residential property, if I talk about section 54, for next 3 years. So there is a lock-in period of 3 years. Whenever you are investing in new asset, so please do not transfer it before the expiry of 3 years. And if you transfer it before the expiry of 3 years, then the exemption will be withdrawn. So in this case, this assessee has actually transferred it. Has he transferred it before 3 years? The answer is yes. In fact, he has transferred it in March 2025, which is almost after 2.5 years and so, 2.5 months only. January, February, and some days of March, he held it and he transferred it. So his exemption should be withdrawn. And how the exemption is withdrawn? The exemption should be withdrawn whenever he'll be selling it. So let's say he's selling it at 45 lakh, minus cost was how much? 40 lakh. So the exemption withdrawn shall be reduced from the cost. So how much exemption we have taken? I believe 40 lakh. So it will be reduced from the cost, it will become 0. And this is how we compute the capital gain. So if you transfer the asset before 3 years, then we will withdraw the exemption. And how we withdraw the exemption? That when we will be computing the capital gain on this, we'll be reducing it from the cost. But now you have noticed that this is a rural agricultural land. So in this case, there is a loophole in the taxation system. Why? Because here exemption can't be withdrawn. Why? Because we will not be even computing the capital gain on the rural agricultural land. So even he is selling the rural agricultural land is not a capital asset. So in this case, first of all, on the sale of this, how much he has made? 5 lakh rupees. 45 lakh is the selling price of this new rural agricultural land, and 40 lakh is the purchase price. So he has made 5 lakh rupees profit on this land. First of all, that would not be taxable. Why? Because it is not a capital asset. Second thing, because he has although contravened it. Why? Because he has promised that he will hold this land for 3 years, but he has transferred it before 3 years. In fact, in the same year, he has transferred it. So in the same year, if he has transferred it, so we will withdraw the exemption. Exemption will be withdrawn if we compute the capital gain, and while computing, we'll be reducing it from the cost. But prima facie will not be even computing the capital gain. So what will happen? Nothing will happen now. Neither the exemption can't be withdrawn. There is a loophole here. Second thing, don't write it in the examination that there is a loophole here. But practically, yes, there is a loophole. And the second thing is that it is not a capital asset. Therefore, there will be no capital gain. So this transaction is happening in the same year. We are selling this rural agriculture land in the same year. So we have to mention this. Note. Please write a note. number one, the rural agricultural land is not a capital asset. Rural agricultural land is not a capital asset. Therefore, no capital gain on sale of such land. First thing. Second thing is the exemption. How much exemption we have claimed? Under 54B, we have claimed 40 lakh. The exemption claimed under section 54B of rupees 40 lakh will also not be withdrawn as the method of withdrawal is to reduce from the cost of new land. Since the new land is rural, therefore no reduction from cost. Understood? Therefore no reduction from the cost. So this is so my answer would be 33,40,000 rupees. Some students can also actually, but you should do like this. But there might be some alternative view also. Practically there is an alternative view. But theoretically, guys, in your examination, please do like this. But just for your knowledge, I am telling you, practically, the assessing officer will not give you this exemption. Why? Because he will say, boss, you have actually purchased the rural agriculture land this year itself. Okay. And this year, actually, you have sold it also. So at the time you are filing your return, so he might be filing the return somewhere around 31st July 2025. So at the time when you are filing the return, actually you don't have any land. You don't have any new asset. So practically there is an alternative view, but that is practical, right? So assessing officer will not give this exemption to the assessee because he will say, assessee, you have not done anything. You have purchased the rural agricultural land. Same year, even before filing the return of income, you have sold it also. So at the time when you are filing your return, you don't have any agricultural land. So how can you claim this exemption? This is the practical stand which can be taken by AO, and AO is correct also. AO is correct also. We will lose. Assessee will lose. AO will win in this case. But still, for your examination purpose, you have to write this. Everybody got it? Now. Yes. Done? Okay. Come to question number.
I have
Yes, please.
in the question one, the assessor also going for the going to assessing officer for stamp duty, and the AO say it is only 8 lakh stamp duty.
Bala, you are saying that we have taken 85 lakh, right?
Yes, sir. I'm just for doubt purpose I added for assessing officer also.
Okay.
Mr. Raja is going for assessing officer, and he said the stamp duty value is only 8 lakh.
80 lakh. Okay.
Mm.
So if the valuation officer, okay, I think that you are adding that in case the assessee requests the AO that please get it valued by a valuation officer, please take the reference of the valuation officer. Is this what you are saying?
Yes, sir.
Okay. And he takes the value of this value as 80 lakh rupees. Okay. So if the valuation officer takes the value of rupees 80 lakh, so in that case, what you will do? See, first of all, section 50C says that the stamp duty value should be compared with 110% of the selling price. See, the stamp duty value should be considered, not the valuation officer value. No, not any other value. As per 50C, the stamp duty value should be considered. Generally, if nothing is mentioned, the stamp duty value on the registration date, registration means that when we are actually transferring this asset to that person on the date when he is purchasing that asset. So the first thing is that the stamp duty value on the registration date. However, we have an option that if there is a prior date agreement and some consideration is taken in the banking mode, then we can take the stamp duty value of the agreement date. So it is for sure that stamp duty value would be either the registration date or the agreement date. This is for sure. And this stamp duty value should be compared with this one. So in this case, 95 lakh is the stamp duty value of the registration date. 85 lakh is the stamp duty value on the agreement date. And we have some money which is received through banking mode. So 85 lakh is relevant for us. So we will take, first of all, 85 lakh is more than 110% of the selling price. So 85 lakh is coming as, yes, it is more than 110%. So 85 lakh we will take. Now the valuation officer comes also into picture and he brings a value which is less than this value. He brings a value of 80 lakh rupees. So first of all, we were taking 85 lakh. But now the valuation officer, another expert, is giving a value 80 lakh rupees. Now we can take 80 lakh rupees. Now, should we compare this 80 lakh with the actual selling price 110%? No. Valuation officer value you should never compare. Yes.
That was my question, sir. Why don't we compare that 80 lakh with 110% of sound?
Why don't we compare? Because the law is not like that. The law says only the stamp duty value should be compared, not the valuation officer value. So the law says that the stamp duty value, because this is actually the authentic value. This is the stamp duty value is the government value. It is the most authentic value. So this is just the benefit we are giving it to you. So we will not be comparing with this value 110%. So this is just for the benefit which is given to the assessee. We should never compare the valuation officer value with 110% of the selling price. Only the stamp duty value should be compared. Got it, Bala?
Yes,
Sir, so what will be the FBOC in this case, sir?
Full value of consideration would be 80 lakh, na? Because we were taking 85 anyways. So Viksha, we were taking 85. You got this, first of all?
Yes, sir.
Forget about the valuation officer right now. We were taking 85 lakh. But now the valuation officer came into picture and he brought a lesser value than 85 lakh. Then if he is bringing a lesser value, let's say 84 lakh, 82 lakh, even 76 lakh if he is bringing 76. So now we'll be taking the full value of consideration as the valuation officer value.
But if it is less than 75, we'll take 75 only.
Correct, because he will practically will not bring less than 75, but in case he brings less than 75, obviously we cannot go less than 75 because 75 is what the assessee is telling us. Got it? Any other doubt,
sir.
please ask. Got it? Okay. The students who are watching on YouTube, if you have any doubt, please post on the comment section. Okay. Now, let us come to question number 2. It says, Mr. Surendra furnishes the following in particulars for the previous year ending 31st March 2025. Okay. For this year, he is furnishing some information. And it says, he had a residential house inherited from his father in December 2009. So he has got a house from his father and he inherited in the month of December 2009. The fair market value of which as on 1/4/2001 is 13 lakh. Okay. When his father has actually purchased this house, it was not given to us. The thing is that the son, Surinder is the son, he got this house from his father. So father is there. When father has purchased the house, that is not given, I believe. But the son, Surinder, has received this in December 2009. Okay. Now, the fair market value as on 1/4/2001 is 13 lakh. It is given to us. In the year 13-14, further construction and improvement costing rupees 10 lakh. Okay. There is a cost of improvement of 10 lakh. The house was originally purchased by his father. Oh, it is given to us. The house is purchased by the father on 1/3/2000 for rupees 10 lakh. So before 2001, his father has purchased it for 10 lakh. So we understand if any asset which is purchased before 1/4/2001, we have an option. We can take the actual cost price or the fair market value, whichever is higher. Whichever is higher. So 10 lakh or 13 lakh, whichever is higher. And also remember, in case of land and building, if they are purchased before 1/4/2001, so how you will do it? A, actual cost. B, generally we do it fair market value as on 1/4/2001, whichever is higher, generally we do it. But in case of land and building, if the stamp duty value is also available of 2001, if the stamp duty value is available, so it is B1, B1 and B2. We'll take the stamp duty value also as on 1/4/2001. First of all, whichever is lower, it is only in the case of land and building. If available, if stamp duty value is available to you. If it is not available to you of 2001, then forget about it. But if it is available, then the fair market value or stamp duty value, whichever is lower, and then whatever is lower, compare with the actual cost, whichever is higher. Got it, guys? You remember this provision?
Yes,
Okay.
sir.
Good. Now, so there is an improvement also. The house was originally purchased for 10 lakh. On 10/5/2024, the house was sold for 75 lakh. Okay. On 10/5/24, please tell me, indexation would be there or not there? Yes. This is before 23rd of July 2024. It is pre-budget. Indexation will be there. He sold it for 75 lakh. Expenditure in connection with the transfer is 50,000. Expenses on transfer is also there. On 2012-2024, he purchased another residential house for 12 lakh and he does not own any other house. Compute the taxable capital gain. Are you supposed to compute the taxes or you are supposed to compute the capital gain? Just the capital gain. They are saying taxable capital gain. Taxable capital gain simply means taxable income of capital gain for this year. Okay. And the CI is also given to us, which is now relevant because the transfer is happening before the budget date of 23rd of July 2024. Okay. And he has sold a residential house, and what he has purchased, another residential house. So I believe you know it. What is the exemption which is available over here? 54 or 54F? Tell me which one. He does not own any other house. Okay, 54. Correct. Residential house sold, residential house purchased. 54F is when any long-term asset other than residential house is sold and you are purchasing residential house. That is 54F. In this case, 54F is not there. Section 54 is there. Okay. Solution number 2. Computation of capital gains of the assessee. The assessee name is Mr. Surinder. Assessment year 25-26. Full value of consideration. it is given to us that he has sold it for 75 lakh. No stamp duty value is given to us of the state. So it is easy now. He sold it for 75 lakh less index cost of acquisition. Why? Because it is before 23rd of July 2024. So you can also mention this is before 23rd of July 2024. So if it would have been exactly on 23rd July, then no indexation. If it is on 22nd July or before, then indexation would be there. Okay. What is the formula for index cost of acquisition? The numerator says CI of the year of transfer. So in this year, we are transferring it. So it is 363. Now, CI of the year of acquisition. CI of the year of acquisition. So if you will see that this assessee's son, don't write this, this assessee's son, he has acquired it in December 2009 from his father. So this is the previous year, 2009 and 10. So his son acquired in the previous year, 2009 and 10. But his father, the previous owner has, his father has acquired it much before 2001. So we will have to take the CI. Can we take the CI of 2001 and 2? Because his father, 2001 and 2 CI is 100. We all know it. 2009 and 10 CI is, they have given to us 148. Okay. Please tell me in the denominator which CI I have to take. CI.
It's 100.
Okay. Okay. See, actually, the real formula as per the law is denominator CI of the year of transfer. For that, we don't have any problem. Sorry, numerator, we don't have any problem. CI of the year of transfer. But the denominator, the real formula is the CII of the year. CII of the year in which it is first held by assessee. Who is the assessee? Surendra. So the real formula as per the law is when it is first held by the assessee. It means that when assessee is holding it for the very first time. So assessee means Surendra, son. So in that case, the real formula, as per the real formula, we have to put 148 in the denominator as per the real formula. But we understand there is a very landmark judgment. What is the name of that landmark judgment? Can you please tell me? I've told you that in the classes there is a landmark judgment. If you remember the name of that judgment, I was telling you about the Bombay High Court has given this judgment in the case of, you have to quote Manjula Jesha. Okay, Manjula Jesha, correct. Manjula Jesha. So this is a landmark judgment of Manjula Jesha, which has actually given the benefit to the assessee that you can take the CII of your previous owner also. So in this case, and this is actually, it's a benefit for the assessee, because if we will take 100 in the denominator, our cost will increase. Our profit will decrease. So so both the answers are, you will have a different answers. Obviously, if you will be using 148 and if you will be using 100, you will be having a different answer. No doubt about it. Both are correct. Institute accepts both. And whenever these types of questions comes in examination, and when institute issues the suggested answers after the examinations, they give both the alternative. Both are correct. Generally, practically we follow Manjula Jesha. Theoretically also we generally follow Manjula Jesha. But however, if you are following Manjula Jesha, you have to quote it there that we are following Manjula Jesha. So this is a landmark judgment which you should remember this name, Manjula Jesha. So CI of the year of acquisition, here we will take 100 into cost of acquisition. So when we are taking 100, so you should mention it here, over here, just this word, refer Manjula Jesha. It was a Bombay High Court judgment, and you should remember this. refer Manjula Jesha. That's it. If you are taking it 100. Into the cost of acquisition, and the cost of acquisition of the previous owner, and the previous owner is father who acquired it for 10 lakh, but the fair market value is 13 lakh. So you will take 13 lakh into 13 lakh. Why 13 lakh? This is the fair market value as on 1/4/2001 you have taken. Everybody okay with this?
Yes, sir. Yes, sir.
Okay. Now, how much it is, guys?
47 lakh 19,000.
19,000.
47 lakh 90.
19, sir.
19.
Okay, 19. This is the index cost of acquisition. And now, index cost of improvement. See, if cost of acquisition is getting indexed, then improvement always gets indexed in that case. So improvement formula is simple. CI of the year of transfer, 363, divided by CI of the year of improvement. Whenever whosoever has done it, whether the previous owner has done it or the current assessee has done it, doesn't matter. So the formula for improvement is very simple. Numerator, CI of the year of transfer, divided by CI of the year of improvement. So we have done an improvement in 2013-14 of rupees 10 lakh. 13-14 CI was 220. So 220 and 10 lakh.
16 lakh 50,000.
1650.
Yes, sir.
Very good. Okay. And are there any expenses on transfer? I believe they were. They have given the direct amount 50,000 rupees.
Lakh 81,000.
10,81,000. Okay. Correct. 10,81,000. It is long-term capital gain on residential property. Now, we have less. This guy is purchasing another residential property, less exemption. Under section
Last long-term capital.
54. And how much he is purchasing it for? He is purchasing it for 12 lakh rupees. Okay. Less. Exemption under 54. A, gross capital gain. So gross capital gain is 10,81,000. B, amount invested. So amount invested means amount invested can be, guys, in residential property also. If he has not purchased the residential property, if he would have invested in the capital gain scheme also before the due date, that is also amount invested. And if he has done both also, let's say for example, he has purchased the property also and he has invested in CG scheme also. So because why he invested in CG scheme, he might be thinking that I have purchased a house which is just of one floor, ground floor, and I want to construct it further. First floor, second floor, I want to construct it further. And he is also investing in CG scheme. So if he is investing in both also, then please club them together. Please add them together and show amount invested. But here there is no such problem. So amount invested is 12 lakh rupees. And is there any fixed limit also of 54? 10 crores.
10 crore.
So 10 crores, whichever is lower. So whichever is lower is 10,81,000. This is the exemption, and the capital gain it is reduced to nil. So long-term capital gain is 0. Done. Everybody, are you okay with this?
Yes.
Okay. Now let us start with one more question. This is for the slum sale. So I want you to revise the slum sale also. And slum sale is quite an important question. They keep on asking it. It is often repeated. Many times they repeat such questions. And always the format is same. The slum sale, because there is only one format of slum sale. The number gets changed, otherwise the format remains same always. Patel is a proprietor of Star Stores since 20th 5 2021. So since this date, he is a proprietor of a business. He has transferred this shop by way of slum sale. So he has transferred this shop by way of slum sale for a total consideration of 40 lakh on 31st March 2025. So he has sold it post budget. Guys, we understand for slum sale there is no such issue, because slum sale we never index it. Even if you have sold it before budget, even if you sold it after the budget, we never index. And how we calculate slum sale, guys, please tell me. In case of slum sale, how we compute the capital gain? Full value of consideration minus.
Investment.
We don't take cost of acquisition, cost of improvement, expenses on transfer. The only change is, normally for other things, we take COA, COI, expenses on transfer, and then capital gain is computed. But in case of slum sale, instead of taking COA and COI, we replace it by net worth. We replace it by net worth and we compute the net worth. And this net worth is never indexed. Even if you have sold it before the budget, after the budget, please do not index this net worth. So we have to compute the net worth. And how we compute the net worth? Please tell me, what is the criteria to compute the net worth, guys? Correct. We take generally, first of all, we take the assets minus outside liabilities. Whatever is your total assets minus outside liabilities. Right. This is what you have to do. Total assets minus outside liability. Guys, you have to give me a moment, please. So I was telling you, total assets minus outside liabilities. This is the criteria to compute the net worth. Outside liabilities means loan or debentures, or it could be creditors, any outside liabilities, not reserves, not share capital. Okay. And while computing your total assets, you have to take the proper values. You have to take the real values. What does it mean? It means that if in case in any asset, the assessee has changed the values, they have revalued the values. So you have to take the before revaluation values. That is the real values. You should not take any revalued value. Got it? So any revaluation should be neutralized. And if the assessee is not taking the correct value, why? He is not charging depreciation correctly. So first of all, you have to charge all the depreciation correctly, and you have to take the proper values. So total asset, and it is very easy. So total assets, how you will be taking any asset which is revalued, please first of all neutralize that revaluation effect and take the original value. Second thing, if any asset is not properly depreciated, please depreciate it properly and then take the value in the assets. Got it? Now, coming back, he has transferred his shop by way of slum sale for a total consideration of 40 lakh on this date. The professional fees, okay, please tell me on this date he has sold it. And this particular business was started in 2021. Tell me whether it is long term or short term.
Long term.
Long. And what is the criteria for this? For slum sale, what is the criteria over here? If your undertaking is how much old? 2 years or 3 years?
3
3
years.
years.
3 years. 3 years. In slum sale, they are taking 3 years. Generally, now it is everything is 2 years now, generally. But for slum sale, still they are taking 3 years. The section is actually 50B. Even if you don't remember the section number, we are completely fine with it. Okay. The professional fees and brokerage paid for the sale was 80,000 and his balance sheet. So this is the expenses on transfer. We can take it. The balance sheet as on 31st March 25 is given as follows. So in our balance sheet, we have building, we have furniture, we have debtors, we have other assets. All assets, we'll take it. But if anything is revalued, we will neutralize that effect. Anything which is not properly depreciated, we will not take it. Okay, can I ask you one more question? If there have been any fictitious assets, let's say for example 1 lakh, and the total amount is 21 lakh, let's say for example, please tell me then which asset you will not take if there has been any fictitious asset. While computing net worth, we generally say total assets. Is it really total assets? The answer is no. Guys, what is net worth? Net worth is what is the worth of that organization. If he has building, debtors, furniture, debtors, asset, these are assets. But whether fictitious assets like let's say debit balance of profit and loss account, you see that it is a debit balance, so you might see this in asset. Please tell me, will you take that also into consideration while computing net worth, or you will not take it? What do you
No.
think? Very good.
Not
You
take.
should not take. Understood, everyone? Subhiksha, Sugandha, Pavitra,
Mm.
Smriti. So you should not
Yes,
take
sir.
that. You should not take any fictitious asset. Guys, examiner will ask you conceptual questions. You should be very, very clear. You should be very, very clear in this. So when you are taking net worth, you don't simply mug it up that we will take all the assets. So if it is there is a debit balance of the profit and loss account, there is any discount on issue of this, etc., which you all know it is fictitious asset. So please don't take that. Don't take that. Only the real assets should be taken, not any fictitious assets. But as of now, we don't have any such problem. Okay. And what is the outside liability? Out of it, own capital, bank loan, trade creditors, unsecured loan. So bank loan, trade creditors, unsecured loan, these are outside liabilities. Own capital or any reserves, it is not outside liability. Okay. Now, other information is given to us that they're giving me other information. They are saying no individual value of any asset is considered in the transfer deed. This information is of not that of use. Why? Because they are just saying that no individual asset is valued. It means that they are saying it's a lump sum consideration. It's actually a slum sale. Now, second, other assets includes trademark. Other assets includes trademark of 2 lakh rupees as on 1/4/2024, on which no depreciation has been provided. So please tell me other assets. Other assets, they are giving us the information regarding 2 lakh rupees. So out of other assets, 6 lakh are okay. Regarding this 2 lakh, which is patents, so they are not giving information of other 6 lakh. Other 6 lakh is we are okay. But included over here is 2 lakh rupees of patents. As on 1/4/2024, it was the value was 2 lakh and no depreciation has been provided. Please tell me what value you will take for this one.
25%
of 2 lakh.
It would be
50,000.
25% depreciation you will provide for the 1 year. So it would be
50,000.
1 lakh 2,000.
depreciation will provide. So it will be 1,50,000 rupees. So this value would be out of 8 lakh, 6 lakh we are okay, and 2 lakh we are not okay. We will take 150. So total it will be 750. Okay. Furniture of 1,50,000. purchased on 5/11/2024. Furniture of 1,50,000 purchased on 5/11/24 on which no depreciation has been provided. On 5/11/24 we have purchased the furniture of 1,50,000. So it includes a furniture of 150. It was purchased on this date. Please tell me what is the value you will take. Will you take 150?
Half the
It was purchased and we are assuming it is put to use on the same date also, and it is 5th November 2024. You understand? It
half
is
depreciation.
after 4th of October 2024, half depreciation. What is the rate of depreciation on furniture? 10%.
10%.
You will take half.
10%.
You will take half, 5%.
7,500.
So how much would be the depreciation on 1,50,000?
7,500.
Correct. No. It is 1 lakh. Oh, sorry. 1,50,000. I computed 7.5% into 5%. 7,500 is the
7,500.
value. So 150 minus this. So it will be 1,42,500. Okay. Unsecured loan includes 50,000 rupees as advance receipt from his wife. So he has received an advance from his wife, 50 lakh rupees. It is part of this unsecured loan, which she has agreed to waive off. Now there is no such liability. So what we will do, out of this 2 lakh, 50,000 has been waived off. So it will be now 1.5 lakh. We will only take 50,000 is not a liability. So this is what we have been provided to us. So let us do it quickly. Solution number 3. Unsure what is the tentative date to finish the GST fast track? GST fast track, the batch which I am taking, that one which I am taking regularly. So that the finish date is almost 20th of August. Okay. Now, computation of capital gain. This is Mr. Patel, and this is a slum sale transaction. Assessment year 25 and 26. Now, full value of consideration. Guys, in slum sale, please remember, there is one more thing which you should remember, full value of consideration. Here, the full value of consideration is given as 40 lakh. That's not a problem over here. But if they would have given to us that he has sold it for 40 lakh, but the fair market value on this date would have been 43 lakh or 42 lakh, what you take, whichever is higher. In case of slum sale, please remember, in case of slum sale, the actual selling price or the fair market value on the date of sale, whichever is higher. So as of now, in this question, there is no such issue. But if there would have been, then please take that as well. So full value of consideration is 40 lakh over here. Less net worth. So for net worth, we'll make working note number 1. Less expenses on transfer. So expenses on transfer over there, 80,000 rupees. We'll compute the net worth, and then the capital gain will be there, and we understand that that would be a long term. Why? It is more than 3 years, it would be long term. So we'll make a note, working note number 1, net worth. So how the net worth will be computed? First, we'll be taking all the assets. So the assets is building, furniture. For building, there was no such problem, 5 lakh. Furniture, see, out of 5 lakh, only 1.5 lakh has certain issues. The remaining 3.5 lakh has no issues. So furniture, 3,50,000 has no
1,20,000.
issues, and about 1,50,000 minus depreciation, 10% into half. After that, we know we'll get how much? 1,42,500. So you can also show this in the inner column, or you can show it outside also. That is not a problem. The furniture value is 350. We don't have any issue with 350. And the remaining 150, we took the depreciation, and it is now 142,500. Are you okay with this? Now, next asset we have is debtors. For debtors, we don't have any issues. 2 lakh. Then we have other assets. For other assets, the first 6 lakh, we don't have any issues. Other assets, 6 lakh, we don't have any issues. We had issues with 2 lakh. These were the patents and depreciation, and only 1 year it might happen also in your examination. It might happen that they might have given you the value of last 2 years. So you have to claim 2 years depreciation in that case. So you have to see that which value is given to us and for how many years we need to compute the depreciation. So in this case, it is just 1. So depreciation at a rate of 25%. So you will take it 1,50,000. So actually these two are the value of the other assets. These two are the value of the furniture.
19,42,500.
1942,500. Okay. Less. Outside liability, bank loan, trade creditors. Bank loan, trade creditors, unsecured loan. 2.52. 5 lakh. 2,50,000. And the unsecured loan contains 2 lakh, which has 50,000, which has been waived off. So 150. Then 42,500.
Yes, sir.
So I'm writing it here. 10,42,500. What it is? Net worth. 10,42,500. Okay. Now, $10,42,500.
$28 lakhs, 77,500.
77,500.
Very nice. 28,77,500. Thanks, Bala Pavitra. Long-term capital gain. This is the answer. So slum sale is quite an important topic, and generally we see frequently examiner repeats on this slum sale question, right? So this was a revision for our capital gain chapter. So next we'll start on, now there is a break of 5 days now. So next class would be on 25th of, from 25th we'll have a regular class. From 25th of July we'll have a regular class. So see you in the morning of 25th, 7:30. Bye, take care. And in the meantime, for these 5-6 days, please keep on revising income tax also, other subjects also. Bye, take care.
Bye, sir.
Bye, 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 bye.
Bye, sir.
Bye, sir.
Bye.
Bye, sir.